Hey everyone, I want to give some guidance on using my levels. And in particular, I'm going to do the week of October 13th due to the fact that I have my weekly levels on for the week of October 13th. I would like to show you previous weeks. I probably will a little bit, but the week levels are no longer active there. They're for the current week. So, looking at the NQ chart and the ES chart. We will have a separate video for trading the gold levels. So on my chart, I usually have a number of things. Number one, market maker levels from the option analyzer tool. I encourage you to read the article on that and study it. Number two, I usually have weekly IV zones. So the WIV, and then like the market maker levels that I mentioned, dead zone, floor, ceiling in particular for October 13th was really high, and then PML. If you want to know what each of those are, I encourage you to read the articles, but they help me to know and anticipate in a range that the market makers have anticipated for the day. But I don't just do that for the day, I do that for the week. So you see a W ceiling, you look a little bit closer, and you will see a W floor. So you're going to see that, and that helps me to anticipate range and get context for where we are at on the day. I do that also on ES. You see a floor here. Um, you will see a ceiling here as well. Let me take off some items. And I do not have a dead zone on ES. I actually use the yellow box method, which is also from the option analyzer. And if you want to know more about that, please read up the article. So I also include some spread monster statistics and levels, in particular median range, uh, on the bottom side and on the top side. Okay, yeah, that was the top side and this was the bottom side. And then I will usually include the high of day at or above level. So meaning when I have that, it says the percentage HOD. 82% of the time, the high of day is at or above here. Same thing on ES. 82% of the time, price, the high of day of price will be at or above wherever that is. So very reliable. I mean, we had this huge gap up, but you can see that price will respect it and gravitate towards it at a certain point to help us have a move for confirmation on either side. So really, really nice level. I like to use very often. Just trying to give a quick summary of my charts. And then I'll include some other information that really is from high confidence, high probability analysis from working with the system. So sometimes I'll have average move band, which is represented by AMB. I'll have imprints, which I have a whole article on that. I'll have OS levels, which is open state. I'll have percentage band references, 1% band. And you'll see letters like DG or OG. DG is from density graph and OG is from odds graph. So I run through these different tools and look for confluence across them. And you will see I actually write down where I got it from. So W1D means wave 1 daily. W20/5 means wave 20 5 minute. Um, you see W7D, that's wave 7 daily. And then I'll have some other levels here too from other analyses that I'll dictate on there. And then I have anything that's weekly is preceded with a W, it goes beyond. You'll see the label on the side. So anything with a W and has a label on the side is a weekly level. So W floor, weekly median range. Here I have high of week at or above, weekday matching, WD. And this week I included both the weekday matching and HL matching from Spread Monster. So yes, there's a lot of information on there, and I have a lot of articles on explaining each of these levels. I encourage you to read through the fundamentals, the fractal mastery page. But in short, I'm using the dead zone as a bias for long or short, meaning if we're above long, if we're below short. So here we had this gap up. I have this bias long to stay long until proven otherwise by a highly resistive area. Um, oh, one more thing. I have these purple lines that are vectors that have the label on the side. So you'll see where I got the vector from. These overlap right now. But in short, what I'm trying to explain is I get my bias from looking above or below the dead zone. And in this case, we had this huge gap up into our weekly IV wall on the top side. And I have a whole article on how to interpret this information once we get into the zone. But essentially, how it works is that once we get in, we either get trapped in or go above or have harsh rejections below. So that's three scenarios. Once I saw this huge gap up going into RTH and us finding support above and not willing to go back underneath, and having supported this high of week at or above level, I was going to be biased long. Now, with New York Open, we of course had this chop in the beginning, but I'm going to be biased long. We're above the dead zone very significantly, staying above this statistical level and staying on the top side of the weekly Ivy wall for the top side. So on the upper side of the upper Ivy wall. So I'm going to be biased long. I'm not going to fight what the data tells me. And you could have definitely just gotten in on some longs at the retest of these lows. It was a very easy day in that regard. And just take longs either TP at the top of the zone, TP at the vectors. And it's really that simple. Just take your trims. Don't try to be a hero and hold all the way for big TPs. This is how you establish long longevity. It's just take your TPs, take your trims. And then you might ask, where and when do I move my stop? Essentially, because of how these levels work, I would have moved my stop after getting above the weekly eyeball. So let's say I've got in here equal lows and 82% high week hour above. So I would have set my limit with my stop below the midpoint. So I'm looking for a nearby key level. Nearby key level. And you might say, well, that's a 34, 33 point stop. Well, yes, volatility is extremely high. I'm going to protect myself by sizing down and widening my stop. Now set my stop below. I'm talking about like 3-4 micros in this case because I want to get a big move. And really that big move would help me get what? 60 points plus on my first TP, plus 100 and then 110 on TP2 and then 150 on 160 on TP3. I mean, I'm not complaining with 3 micros, maybe even 6 micros and taking 2 off each time. That's significantly great. So I would move my stop once I would get above this TP1. I don't like to look for, especially if I'm looking for these larger moves, I'm not looking to TP at 10, 15 points if I'm expecting a 110 point move. Now, we don't always get it right in terms of what we expect. So essentially, I would be looking for moving my stop to break even at this key area. I mean, 60 point jump. You see here, 60 point jump. And then all the way to 180 points. So that's essentially how it works. Stop below, move stop to break even, breaking above, and then it came back down. See, this is how you can protect yourself. And you might say, well, I'm willing to hold through this, and that's fine. If you would have set your stop break even, you actually would have almost gotten hit, but then it would have gone even higher. So that's one example. Invalidation of this would have been breaking below this midpoint of the weekly average wall. I mean, it was defended after we broke into it, defended for a long time. So that's how I would have treated that trade. And you might say hindsight is 2020, and that's true. But if I was to literally, I mean, this happens week after week, day after day, these statistical levels get respected even for scalps, 20, 30 points on NASDAQ. And on ES, even 5 to 10 points easy. So the more you look at these, you can revisit previous days and weeks analyses. Very, very helpful. Um, when we have a more normal day, if I could say, where we do open up near the dead zone, um, the narrative changes a little bit because we don't have those huge gaps. But like you see here, this high of day at or above. So right at open, this isn't always close, but I look for it for guidance, especially during ETH. Um, you see that it's trying to find support above, especially with the hourly vector being there. Vector is you have a whole article on it, but it's a level that I get from the fractal system. It machine learns where support and resistance is on the hourly time frame. So it's finding support there, plus this weekly statistical level, and it ended up jumping up. Then you're going to see these things like 50% target, LLOD, which stands for last line defense, OS, which is again open state, 50% ban, S vector, meaning a splice vector. I have articles on all of these things, but essentially, I was treating it as a resistive area. And when it came up, this last line of defense, which I talk about in the imprints article, worked super, super well. And this fact that it was a last line of defense for sellers to have any opportunity to have a say in this move. And they would definitely wanted to defend it. And it just did not come back. I mean, we ripped through the dead zone. So here I could have reevaluated my bias as we're bouncing above this weekly statistical level. It would have been an easy TP. But for holding, really, you only had to wait about an hour, and then it kept ripping down. And then we're getting back into that weekly IV wall zone. And it bounced upon the end of day floor from the OMM tool, which would have been an amazing area to risk off. But it kept ripping. I mean, you would have been sleeping probably if you held through this into the morning. And once we would have gotten below the weekly IV wall, that would have definitely sounded an alarm for me to let me know, hey, either this move is going to start dying out very soon at one of these key levels, or we're going to start closing this gap. So when I rechecked the fractal in the morning as to where we were at on the NASDAQ with this drop, we were at extreme levels. And I gave this call out in the Discord that at 450 area, we needed to start looking for longs. And when we started finding support here, see this floor and this high of week at or above. You see how this, try to zoom back a little bit. This high of week at or above HL was respected. I also included the weekday one. Not to mention, I also have, if you ever see these gray lines, I have the QQQ equivalent on to help me for some reference. But essentially, it's bottom tick right there. So this came down, jumped a lot, 150 points. But I was waiting for this. I had this already there, and I saw some additional open states and imprints. We had the overshoot as usual with open states, and we had a rocket that just took off from there. I gave that call out. I personally got about, I think it was 280 points. Yeah, I took profit at 700. And yeah, so I kept going. Took my final TP here. I started chopping again midpoint of the weekly IV wall zone in this case. So that's how I would have treated that. That's on the NASDAQ, and then on ES. I have a little bit of different information. I include order flow info like single prints. I get my pivot from the milk analysis charts also in the Discord. I include a lot of the same information. This was excellent. This single print box, after before I updated, was down here, but after it got partially filled, I moved it up. But initially it was here, which single print areas are great areas for reversals, um, especially on first test. We had the big gap up, respecting this weekly median range, and just taking profit above. The median range levels work really, really well as targets, and then with additional confluence or just higher time frame, and it could serve very well as entries as well. So you could have seen this come down and then get back above, and then we revisited that low and it took off. So you could use principles of support and resistance with these charts and get a lot of confirmation. And then we could just take this move back up. The pivot, which is the white area, this white box, helps us to have strong confluence for bias above or below. Again, we had this gap up from the yellow box. So what I'm using as a key bias is this pivot. You could actually take entries off of it. So if you wanted to wait, oh my goodness, big gap up, you could take entries anywhere within this pivot, especially it's only 2 points wide. And you could have set your stop below. Just size down. This would have been a crazy volatility to take part in, which is fine. Just size down, manage your risk. And once you do that, you can start to anticipate areas for taking profit. And honestly, this was a reasonable take profit, this single print. Also, these vectors as well, because of the way that we were moving in the market. I mean, defended very, very well. And then let's use October 14th as an example as well, because it's a more normal day without the huge gap up. See here the milk pivot aligned with this. When I say milk, that's the username of the gentleman who also includes this chart in our Discord. I just get the milk pivot from it, his pivot, and his username is milk. So it just started finding support here, and then it just moved up. So you could just set your entry here and your stop below. You might say, well, a 10-point stop on ES, and it's like, yeah, just size down, no big deal. Here you're aiming for larger moves, and this week, of course, large volatility. And if you want to look at a week that doesn't have as aggressive volatility, then let me see here. I got to refresh that. We could do analysis on previous weeks. So I'll show that perhaps in a separate video, but the group of drawings is not showing up right now. But if we're not including the weekly levels for this day, and it's a different sense of volatility, then, I mean, we had the big drop there, but even then, I had some levels here that were being respected. But a more clear day that doesn't have that extreme volatility. Let's look at this one. So we had the support above. I would have been aiming the ceiling, support above, but we had this pushback down. So here, I'm not really looking for anything too aggressive. It's kind of just oscillating around, but it's slowly dying. And this is establishing a high. This was an all-time high. So I'm waiting. Technically, yes, you can take longs up above. I have an entire article on taking trades off of the market maker dead zone, but I'm waiting with this because we're at all-time highs. And then as it's slowly dying, now we're finding resistance at this high of day at or above. And it's not being able to get above. So that helps me to start develop a bias. This is slowly dying out. Compressing, dying out. So you could have either waited for shorts at the bottom of the dead zone and set your stop at the midpoint, or set your stop at the top. And then it would have died, and you could have taken profit here at the median range in PML for about 70 points. Could have held to here, but 70 points is great. And 300, 150 points is great too. So literally just study these, see how it respects it, read the articles, and you'll get a great understanding, especially just looking at it over and over and over again, listening to analyses. You get a great understanding as to being comfortable with trading the chart. And again, you don't have to catch the 150-point moves. You can catch 30 points, 40 points, 20 points, 100, and also make great gains. So manage your risk and keep studying.